This show is sponsored in part by St. Germain Catering, a woman-owned business that is professional in every delicious detail. And Fairfax Social Sports, Northern Virginia's largest co-ed men's and women's adult sports league, with over 32,000 players who participate in flag football, softball, basketball, and other adult sports. And finally, the Ruddy Law Firm in Fairfax City, Virginia, a law firm that provides legal services in the fields of business, probate, estate planning, and elder law. Welcome to the Probate Nation. My name is Richard Ruddy, and I'm the moderator of How to Probate an Estate in Virginia. Probate is a process to transfer ownership of probate assets to the beneficiaries of a deceased person. Like a journey on a slow-moving steam engine train, probate has a beginning, several stops along the way, and at the end of the trip, the balance of the probate assets remaining are delivered to the decedent's beneficiaries. Some probate train rides are short, while other probates seem to never end. In the course of your probate journey, you have many responsibilities, including collecting assets, paying bills, investing estate proceeds, and eventually distributing the estate to the legal beneficiaries. One of the most important functions you must perform is the annual estate accounting to the Commissioner of Accounts, where you disclose in detail and support with approved documentation all of your actions with the money and assets of the probate estate during the 12-month period. We will take a look at the estate account form in a moment. It does not appear to be a very difficult form to complete, just 11 numbers to report in the account summary. Yet time and time again, even the brightest of executors and administrators are unable to prepare it properly and get it approved by the Commissioner of Accounts. Our program today will provide an overview of the estate account with special attention on what documentation is acceptable to support what you are reporting on those 11 lines. In subsequent programs, we will work through a sample accounting and then address how to wrap up an estate, which includes a final accounting. With us today are two key members of the Fairfax County Commissioner of Accounts Office to provide an overview on preparing an estate accounting. Kathy Brudvig joined the Fairfax Commissioner of Accounts Office when Jack Russ was appointed Commissioner and has been the head auditor in the office since 2008. As head auditor, she oversees a team of auditors that review all accounting submitted to the Commissioner each year. Prior to that, she worked as a paralegal for Jack Rust at the law firm of Rust & Rust, preparing inventories and accountings. Tracy Wemberg has been with the Fairfax Commissioner's Office since April of 2007 and presently is the Vice President of Administration. As VP of Administration, she is involved with all aspects of the Commissioner's Office, including enforcement actions against executors who do not file accountings, which can be approved by the Commissioner. Ladies, welcome, and thank you for taking the time to talk with us today about how to prepare an estate accounting.
Thank you.
You know, we're taking a look at that form which we show on the screen, and it is fascinating to look at that and realize that there's just 11 lines in the form. You think it would be so simple to complete. But boy, it's been a challenge for time and time again, as you know. So let's just go ahead and get right to it. Tracy, take a look, we'll take a look at line 1 on the form. Tell us a little bit about what goes on line 1, which is called the opening assets.
Okay. Line 1 is the beginning assets, and the number you're going to put there is from the inventory, parts 1 and part 3. And hopefully you filed your inventory and it's been approved with our office.
Okay. Now, when you file the inventory, there is no documentation required to support the values you report. Is that correct?
That's correct.
Okay, so when we open up with those opening entries, those are numbers that have not been substantiated yet.
Correct.
Okay. So then we go on to line 2, and we begin to look at that is what's called receipts. So what goes into receipts?
Receipts can be anything from interest that's earned, assets that are received, refunds that come from
security deposits or telephone
yes.
stuff like that. And are the things that are called receipts, are those the same thing as income?
No, they are not the same as taxable income.
So they could be income, but they're not necessarily
They could be, but not necessarily, correct.
Okay, because the refunds would be something like that. So In compiling those lists of receipts, should the executor compile a separate sheet that actually summarizes everything received and then total that up and bring that number to that line?
Yes, what's on line 1 is a summary, or excuse me, line 2 is a summary, and you will provide a list of itemized receipts. So all the interest by month and date and bank account, all the assets coming in, so yes.
Okay, so we do have to break that down monthly as opposed to getting an annual statement of some kind from
Correct.
the bank. Okay.
Correct.
So what type of documentation are you looking for to support the receipts that are on this itemized list?
Bank statements, if you receive a refund from a company, a voucher normally that goes with that.
Okay, so we need something to be attached to track that.
Right, to verify that it was received.
Okay. Now, do you want, you talked about bank statements. So do you want the complete bank statement, or can we just give you the page that has that receipt
Yes,
on
no,
it?
we need the complete bank statements, and we need complete bank statements for every single month in your transaction period year. So
we could have a month that might cross over, and we might have 13 statements.
Correct.
Because they might have crossover periods.
Right.
Okay. Anything else? Any other types of receipts you can think of that you want to mention that would go on line 2? Come
not
to
that I
mind.
can think of right off the top.
Okay. So, Kathy, let's take a look at line 3. This is called gains on asset sales. So what goes on line 3?
You would report the gain of any asset that you sell where you wind up with more money than the value you reported on the inventory.
Okay.
So
and again, the gain we're talking about is measured not so much from a tax standpoint, but from the standpoint of where we started as far as the inventory.
correct. And so taxable gains are another animal entirely. But the gains that you would report here, if you sell the house for more than you have on the inventory value, then you would report the gain. The difference would be then the gain on the sale.
Okay. And again, the types of documentation that you're looking for to support gains.
When you sell real property, you would need to have a copy of the executed HUD-1. So that's the signed one, not the good faith estimate. And when you sell securities, you would need a copy. You need to submit a complete copy of the brokerage statement. So those are, we do require documentation for all gains.
Okay. And again, the key there is on the gain side is that the brokerage statement may report a gain that might be different than what you would be reporting on the accounting, right? Because again, they might have a different cost basis or carrying cost than what you had, right?
On a tax return?
Yes.
Yes, that may be different, yes.
Okay. Let's take a look at line 4, adjustments. Okay. This is kind of a mystery line. What goes on line 4?
Adjustments can be used for correcting inventory values if you did not have access to bank account information because you had not qualified yet, and you find out that your guess of the bank balance is different than it was in reality. You would then need to correct the balance of the bank account, because otherwise your entire accounting will never balance. So you do have to correct the value of that. Also, too, you may receive additional assets. You may get assets that have come in from unclaimed property. So if you find other things as well after discovered assets.
Now, you mentioned this is where if fiduciary found out that the asset value they report in the inventory was incorrect, and a case where I can see that occurring is where you took a guess at the value of real estate, but then went back and had it appraised.
Correct.
Maybe for tax reasons, so now you knew its true value, and this is where you would actually make that adjustment if you wish to do so.
Yes, if you wish to report that adjustment, that would be where you would do it to correct the value.
Now, is this a spot also where we would reflect fluctuations in the value of the assets?
No, please never report market fluctuation. Please do not do that. The entire account summary should be reported at the carrying value, and so market fluctuation is never reported.
Okay, so carrying value is the value that we're claiming is the value.
Correct.
Whether it's whether it's the tax basis value or not, that's not important, but it's the value we're reporting to the commissioner, and that's what he considers to be the quote carrying value, and that's what we measure gains against.
Correct.
And that's what we would adjust against. Okay, so at this point we've gone lines 1 through 4. We get to this line 5, and it seems like a simple line. It totals up to some dollar amount, and it's a total. And so, and that's pretty much all that goes on line 5, is that right?
Yes, the totals of lines 1 through 4.
Okay, so now we're going to go to the bottom half. So we have this number that's total on line 5. We go to line 6, Tracy. Okay, so now this becomes where we start to really look to the difficult stuff. It's called disbursements, where we pay off debts and expenses. So as a kind of a prelude to our discussion, I know we've chatted about this, you want to make sure, of course, that you never pay any bills and disperse stuff if you think this estate has more debts than it has assets.
Correct.
You want to make sure that you talk with the Commissioner's office and figure out exactly what needs to be paid, because there is a statute that controls what gets paid and when. So assuming we don't have an insolvent estate, tell us about some of the things that get disclosed here on line 6.
Line 6 for your disbursements is anything that you've paid out of the estate. If you've paid a credit card bill, if you paid the balance of the funeral bill, anything that's paid out of the estate will go there.
Okay.
And it's important to not pay non-estate assets out of there.
Okay. So in dispersing, the types of things that you would disperse would be, to pay the filing fees with the Commissioner's office, the probate administration fees with the probate office. You may have to hire a CPA or maybe an attorney.
Correct.
You may have to pay some taxes. Maybe the decedent owes some bills for, at the end of his life, they had different bills that need to be paid off, medical bills and so on.
Correct.
Some of the things that also could occur would be commissions, fees that are due to the fiduciary for their fees as well.
Yes.
And so now, how do we actually substantiate all those things? What kind of documentation are you looking for to support those expenditures?
Okay. Again, complete bank statements showing the expenses and the payee and the dollar amount and the dates are fine. Invoices, original invoice from a vendor and then a following invoice, which then show the credit balance on there. Vouchers, if you had a bill that you had to pay that you can get a handwritten receipt for, that's fine as well.
Now, of course, when you talk about from the banks, you're talking about the checks that would come back from the bank that are the sheet of checks. Talk about the types of checks that you guys accept to support your disbursements.
Okay. What we can accept are the images, the small images that come with the bank statements that officially are produced by the bank. So not your printouts from your online accounts, but the statements that come, the images that come with the statements.
Okay.
And yeah, we do not want you to use cashier's checks because you can't get a copy of that back. You can, it's very, very difficult, but we prefer that you don't use cashier's checks.
Okay. How about bill pay? How do you guys feel about bill pay?
Right. If it's an standard, reoccurring utility while you're, waiting to sell the house and you have to pay the heat and the electric and all of that, that's fine because we can then again have a voucher, the invoice from them, in addition to the bank statement normally has who the payee is as well.
Is this area in line 5, or line 6 I should say, is this where we most commonly find the problems that then causes the Commissioner to take enforcement action?
We do find a lot of problems there. A lot of times it's lack of documentation, there's math errors, there's
Improper.
improper disbursements as well.
Okay. So that this is, we want to be able to support it and, of course, make sure that it fits within the normal estate administration expenses.
Correct.
Let's take a look at line 7. Kathy, we talked there about losses on assets. You talked about gains and earlier. What goes on line 7 then?
Any asset that you sell where you are getting less money than the value that you reported on the inventory. So this happens a lot with securities, with real property. Sometimes people may donate clothing or household goods and then they use that as a loss. They would report that as a loss because, the value's gone, so.
Sure.
Yeah, and again, you would still need to provide the documentation. So the documentation in the form of with securities would be the statement that shows the number of shares sold, the value that was received. Hopefully the statement shows the carrying value, but if not, you have that on your inventory, or on the previous account.
Okay. And in the case of a real estate sale, again, we do also want to see a signed HUD.
A signed HUD-1, yes, or the settlement sheet. I know not everybody knows HUD-1, so.
Sure, and then you're able to track that disbursement dollar amount that's due to the seller into the account as a deposit.
Yes,
okay.
yes.
Okay. Well, now we're getting to the good stuff. Distributions to beneficiaries. So this, of course, is, from a probate journey standpoint, this is where we want to get as quickly as we can, so we can give folks the money that their loved one wanted to go to them.
Correct.
So tell me a little bit about what are we putting on this line called distribution to beneficiaries?
This is where you as a fiduciary will have dispersed either cash assets or assets in kind, like stock, and transfer the stock into their names, also tangible personal property.
So is this the spot, though, so when we have a will and they have a series of bequests in the will,
Yes.
that as part of the review process from an audit standpoint, then you would then go down the will to make sure that each one of those bequests have been fulfilled?
Yes,
And this
all
would then
specific
and this
bequests.
would be reflected here in this particular section under line 8?
Yes, that is
Okay.
correct.
Okay, so talk about the type of documentation, again, that we're looking for here to support, what you're claiming to be a distribution.
Right. Because you are not using a cashier's check, hopefully, and using the estate account, you should have a canceled check that comes along with your bank statement. And that, with the front of that shows who received the check and the dollar amount, and that's the verification we need. Sometimes, if you don't get those statements with the images, we'll need handwritten receipts. So we will need an originally signed receipt from the beneficiary. You will also, when you're giving out personal property, you will need a signed receipt saying I received the grandfather clock, or et cetera, whatever the specific bequest was.
Okay. And the receipt form you're talking about, there's nothing really magical about that particular form. I mean, I know on your website, the Commissioner's website, they have a form that's a sample that you could use, but the idea is basically to identify what it is you received, and if there's a value, put that value on there, and
Correct.
go ahead and sign and date it. And
Right.
that pretty much should be sufficient, I would think.
Yes, that is. And we get the original.
And the original, yeah, I noticed that request, and that can be a challenge sometimes.
Correct.
Okay, so we talked about that a little bit. When we disperse money to people overseas, and it may be difficult to even communicate to them either in the same language or otherwise to get originals. Any thoughts about how you folks are trying to deal with that challenge?
We try to work with the fiduciaries and work with them. A lot of times we'll accept FedEx, and we know it takes a little longer sometimes to get those signed receipts back. So we'll wait a little bit, but we really need an original signed receipt. And we did receive one in Chinese once, which we had to have translated, but it worked. So
How challenging that must have been. So again, we mentioned that there's a receipt form that the Commissioner's Office has made available. And if you look we show on the screen the Commissioner's website, which is www.fairfaxcommissionerofaccounts.org. So as noted earlier, again, when you start to make distributions, be very careful, because we want to make sure before we get to that point that we don't have an insolvent estate. So we're going to line 9. Okay, so to round out our calculations on the bottom half of this very simple form called estate accounting, assets on hand at carrying value. So Kathy, talk a little bit about what we're going to capture there.
What you'll be reporting on the assets on hand are the assets that you have remaining after you have dispersed or distributed things. So any remaining funds in the state bank account would be reported there. Any undistributed securities would be there. Any undistributed tangible personal property. And you want to report those at the carrying value. So that is the only time that you're going to recognize the market fluctuation, by also reporting the market value.
So on line 10, for purposes of making sure our account balances, the carrying value will be what we're showing the Commissioner we bought it at, or we're reporting it at. And so if we're up on the earlier part of the accounting, if we report dividends that have been received and then we reinvest them, then we have to pick up that new acquisition cost carrying value in the calculation to figure out what we have left in carrying value.
Yes, reinvested dividends do get reported as the step up in the carrying value. You're absolutely correct. And so that can get a little complicated if you have many different reinvested dividends, because then you have to make sure that you're reporting the correct ones when you sell them.
Yes.
So that can be, it can be a little tedious.
Yes.
Taking track of it.
Now line 9 though is going to capture carrying value. So when we get finished with line 9, we then go to line 10. Okay. So line 10 is kind of when we figure out whether everything's correct.
Well, and hopefully it matches line 5.
So that's the key. So
Yes.
if it turns out that line 5 and line 10 do not match, and often there is something that's not correct. So what do you tell people to do?
We ask that they please still go ahead and file the accounting. We're aware that a lot of times math can be challenging, or there may be something that they're just not familiar with. We, as auditors, can many times find the error, and we can help them balance the account, or we can find at least where the error may be, which schedule it's in. And so we may be able to ask the questions that then help us figure out where the true error lies. But we do ask that they please go ahead. Do not be afraid that it doesn't balance. If it's off by 1,000 or whatever it is, please, it's far better to file it.
Yeah, and we do understand that frequently folks get sort of mired in fear that their account does not balance, and as a result just sit on it, and that of course is bad, because then that starts to get the enforcement process in action with the commissioner's office. So
Correct.
That's not good.
Correct.
So that's why you want people to go ahead and let's get it in, let's see if we can help you, and again, you guys are very proactive in trying to help the public.
Yes.
There's one last spot on that form that still has to be completed, and there's this space called, market value of assets. Tell us a little bit about what goes on that line.
Certainly. That is actually the second column for the assets on hand, because you're reporting your assets on hand at the carrying value, and so this is another place for you to then have the market value on the form. The market value is important because market value helps establish the filing fee that is paid to the commissioner's office, and it also is important for you to be able to calculate fiduciary compensation for yourself. So market value is important.
Very interesting. This has all been very, very helpful, and I will tell our viewers that I want to call their attention to the fact that there is a very informative memorandum entitled Tips for Filing Your Estate Account that has been produced by the Fairfax Commissioner for Accounts Office, and it is available on their website at their resource tab under the help desk. So again, I would encourage you to visit the Commissioner's website for that very helpful tool. So much great information, great tips, a lot of good things that, boy, oh boy, from an auditor's perspective, it's just gold as far as how to prepare your accountings. So I want to ask you to give some final comments. What are some of the most common mistakes you see in accounts?
Improper disbursements, improper distributions, and unfortunately fraud.
Really, that's so sad.
It is very sad. It is, but we see it more often than we would like to mention.
Which is, I think, why Mr. Russ calls attention to the importance of the bond.
Correct.
In the whole process.
Correct.
Kathy, how about yourself? Anything you would add to that as far as common mistakes you see?
Like Tracy said, math errors are very, very, very frequent. And again, it's trying to do things properly and documenting it. And I think that if you follow through with each line, it will reduce your amount of errors tremendously.
Okay. And now, I know fraud is a serious mistake, but are there any other, we talk about common mistakes, any serious mistakes that get people in trouble time and time again from your perspective?
Yeah. Actually, when they disperse to the wrong people, when they're making their final distributions and they're unequal, or they, didn't include someone because they didn't feel they needed to, or someone really should have gotten something, so they gave them some extra money as well. We've seen it all. And these, unfortunately, are improper, and it's the fiduciary's responsibility to restore the state back to where it should have been.
That's a tough letter to write.
It is.
Kathy, anything else you can add to that? Anything that occurs to you?
I'm drawing a blank.
Yeah, I think those are the big ones. Those are unfortunately, the big ones.
Well, that's all really, really great. And going line by line has been very, very helpful, I think, for our viewers, and certainly the type of documentation that will work and then what won't work.
Right.
Okay, to make that accounting, as again, our goal is to make the accounting audit-proof, and I strive for that myself, and not always very successful at it, but we all strive to get an audit-proof accounting, and this is great information. So I want to thank both of you for taking the time, and for the Fairfax Commissioner of Accounts Office for supporting this program. It's been a great resource for the public, and of course you guys are very public-oriented as far as your support.
Thank you for having us.
So thank you. One of the key responsibilities of the Commissioner of Accounts Office is to trust but verify. And that is what the audit process does with each accounting you submit. Assets received, bills paid, distributions made, and assets you retain all must be reported by you, the fiduciary, and supported by proof in an annual estate account. Today you heard directly from the auditors as to what you should do and what you should not do to make your estate accounting audit-proof. Great start to understanding an important task, and I hope you found their comments helpful. But this discussion is no substitute for getting advice and guidance from a probate attorney on each accounting you prepare and propose to submit to the Commissioner, and we encourage you to do so. This brings us to the conclusion of our show today on preparing an estate accounting and overview. The probate training will remain at the Commissioner of Accounts Office for a while. In an upcoming show, we will work through a sample estate accounting from beginning to end and show you how to compile the information and assemble the supporting documentation with the goal of making your accounting audit-proof. Please join us then to learn step by step how the auditors suggest you prepare an estate accounting. On behalf of myself and the Probate Nation, thank you for visiting with us.